Disney has fired back at activist investor Nelson Peltz, rejecting his bid for a seat on the group's board while staunchly defending CEO Bob Iger. It said the head of Trian Fund Management had no track record in large-cap media. Well, from the New York Times to Nielsen, the sector is increasingly the target of these types of campaigns. So is the drama at Disney, just another example of a trend that's set to continue. Yahoo Finance's Allie Canal has more on this. So, Allie, what are you watching?
Well, Rachelle, there certainly has been an uptick in the number of activist campaigns, especially in the back half of last year. According to data from FDI Consulting, there were 119 activist campaigns in the third quarter of 2022 versus just 87 in the year prior. And there were notable increases in the number of campaigns focused solely on operational changes and divestitures. In regards to Disney specifically, if you remember back in September, Disney and Third Point's Dan Loeb reached a settlement to add one director to Disney's board after Third Point was arguing for an ESPN spinoff and acceleration in that timeline when it came to Disney buying out Comcast's 33% share in Hulu, among other demands. So Disney in particular has been very vulnerable here, especially as the media sector seems to be going through this reckoning. $500 billion was wiped off large and medium caps for a lot of those media companies last year alone. There's been an increased focus on profitability, a lot of competition entering the space. So there is this opportunity for activist investors to come in and say, hey, look at this stock. It's underperforming. I have a way to help. Disney, not immune to that, with shares falling 45% in 2022, the worst annual stock performance for the company since 1974. And really, these activist investors are trying to find ways to close that valuation gap due to these depressed stock levels. And that's why we're seeing a lot of calls for spinoffs, a lot of calls for breakups. So I do anticipate that these activist investors are going to be more aggressive in 2023. We already saw that happening in 2022. And certain sectors like media, telecommunications, and even healthcare are certainly more prone to that.
And you figure as they're trying to really figure out what the customer wants these days, this is getting tougher. And Allie, of course, Disney's saying that Peltz lacks the skills to assist the board and doesn't understand the business. But could this proxy fight force Disney to make certain changes at the company?
It definitely ups the pressure for Disney, but I do think it's important to remember that Bob Iger re-entered the CEO position in November. That was not that long ago. And we haven't seen a ton of strategy from Iger since that time. Sure, he's dismantled a lot of those organizational structures that former CEO Bob Chapek put in place. Those were already a bit controversial. But other than that, we haven't gotten a lot from Iger. And I think moving forward for Disney, it's very important for this company to establish its identity. What does it need in order to get to that next level? What assets does it need to cultivate that identity? And what could it possibly do away with? That is the most important element for shareholders. Nelson Peltz, these proxy fights, it's all just a distraction at this point. And that's really the narrative that we've been hearing from a lot of analysts. So we'll have to wait and see when it comes to Disney. But I think, number one, they need to establish who they are as a company.
Exactly, because that really will determine the kind of changes that they have going forward. Allie Canal, thank you for that update.